Hello, today we'll be profiling Tropicana Corporation Berhad. This is based on a report by CIMB Research dated March 31st, 2014. Though the stock is not rated in the report, CIMB assigned a valuation range of 3 ringgit and 7 cents to 3 ringgit and 58 cents for Tropicana, based on a discount of 30 to 40% to its fully diluted RNAV of 5 ringgit and 11 cents. Tropicana closed at 1 ringgit 63 cents on April 4th, giving the stock a potential upside of 88 to 120%. Tropicana is principally involved in property development and investment. It was listed on the main board of Bursa Malaysia in 1992. Its main shareholder is Tan Sri Danny Tan, who holds 70% stake in the company. Tropicana was a relatively quiet company until late 2010, when it embarked on an aggressive land building activity. Over the last 3 years, the company acquired a total of 2,200 acres of land at a total cost of 4.5 billion ringgit, with original gross development value of 43.5 billion ringgit. What was initially perceived as an aggressive bet on the property market turned out to be a masterstroke. Many plots of land acquired have appreciated tremendously. An example would be the 37 acres of land at Tanga Bay, which was acquired at a cost of 190 ringgit per square foot in 2010, while recent transaction was at 1,000 ringgit per square foot. Today, Tropicana has 1,710 acres of land located strategically in Klang Valley, Iskandar, Malaysia, and Penang. The total gross development value of this land has risen to 77.6 billion ringgit. Today, Tropicana has the highest gross development value to market capitalizations of all companies on Bursa Malaysia. To realize its full potential, Tropicana is implementing a transformation blueprint which includes the following: unlocking value through development, unlocking value through land sales, de-gearing initiatives, strategic partnerships, enhancing corporate identity to rebranding exercise. To implement this blueprint, the company has engaged a team of experienced professionals, which include Dato Yao Kok Sing, formerly with Sunway Group, as its Group CEO, Edmund Kong, formerly with Desa Park City, as its Group MD for Operations, and Casey Kok, formerly with CIMB Group, as its Group MD for Corporate and Strategy. Tropicana doubled its sales from 968 million in FY 2012 to 2.2 billion ringgit in FY 2013. For FY 2014, it plans to launch 3 billion ringgit worth of property and to chalk up sales of more than 2 billion ringgit. The sales launches will be focused in Klang Valley, with 3 projects accounting for 61% of total group launches. Penang will account for 28% of total group launches, while Iskandar, Malaysia will account for the remaining 11%. Last September, investor was taken aback by Tan Sri Danny Tan proposal to inject 762 acres of land bank in Iskandar, Malaysia into Singapore-listed Alpido Limited for 774 million Singapore dollar. Investor was surprised that he managed to accumulate so much land since his injection of 943 million worth of privately owned assets into Tropicana in 2012, and that he chose to bypass Tropicana and opt for Albedo. With 2 vehicles, the question that arose was, which will be Danny Tan's preferred vehicle? In the confusion, Tropicana share price tumbled 44% from a high of 2 ringgit and 15 cents in May 2013 to a low of 1 ringgit 20 cents in February this year. Recent reports, however, indicate that the deal may be aborted This could go a long way towards addressing the issue of conflict of interest and corporate governance. Tropicana has a high gearing ratio. Its gross gearing stood at 0.75 times, while net gearing stood at 0.55 times. This compares with other developers with net gearings of only 0.3 to 0.4 times. As part of the de-gearing exercise, Tropicana has lined up over 1 billion ringgit of investment properties for sales. If all goes through, and after factoring in recent land acquisitions of about 500 to 600 million, the company net gearing would be lowered to 0.4%. CIMB has tabulated Tropicana's RNAV in this table. Tropicana has a RNAV per share of 5 ringgit and 77 cents. Adjusted for warrants and redeemable convertible unsecured loan stocks outstanding, its fully diluted RNAV is 5 ringgit and 11 cents. CIMB then apply a smaller developer's discount of 30 to 40% to the fully diluted RNAV and arrive at a valuation range of 3 ringgit and 7 cents to 3 ringgit 58 cents for these stocks. As noted earlier, Tropicana dropped in the past 6 to 7 months from a high of 2 ringgit 15 cents to a recent low of 1 ringgit and 20 cents. It nearly tested the long-term uptrend line at 1 ringgit and 10 cents. Since then, it has rebounded past its horizontal resistance at 1 ringgit 50 cents and 1 ringgit 60 cents. It looks like the stock may continue to trend higher. In conclusion, Tropicana can be a good stock for your investment portfolio based on the following: large land bank to sustain its property development activities. Land bank acquired at lower cost, giving it higher profit margin, and an upside potential of between 88 to 120%. However, you have to weigh concern about corporate governance issue which may arise in the future. So thank you for staying with us. I'm Alex Liu.